Around 51% of our readers and subscribers come from the United States, while the other 49% come from all over the world. That's why we try to cover international stocks as much as possible, at least interesting ones that are disrupting. And lately we've been looking at Latin American fintech, and we did a couple pieces on Stone Co. was one, and Nubank. And now we're looking at dLocal, which is a little bit different from those other two. So wanted to start out talking about when you're traveling, some of the difficulties that you come across with money, maybe some little tricks to solve those. So if you don't know what the Forex rate is, so if you don't know how to value the local currency, which you should before you leave, but if you end up in a place where you don't know that, just go into a shop in the airport and buy yourself a Coke that's roughly $1. That'll work pretty well in most places. When you go to get money from the ATM, always be really careful about which ones you go to, so they're not all equal. Make sure you go to one that's offered from a local bank. Always carry small bills because no taxi driver on this planet has change. And be careful about multiple currency types. So in places like Cuba, you'll have two types of currencies that are being used, and the individuals will quote you a price and then jump from one to the other, right? Oh, I meant the other one, right? So because they're significantly different in their value. And Argentina actually has a black market where you can buy the normal currency at 30% discount. I never understood why, but that's the way it is. And when you purchase something, you always want to act like you're an expat because you clearly stand out. You're not a local, unless you can pull it off in some countries, but you're an expat and you've been there for years. That's exactly the impression that you want to give off. So when you buy something, you pretend like you've done it 100 times, as opposed to trying to ask the price in a language you don't understand. Now, all these problems go away when you land in a foreign country and start to figure out how they use local payments. And you'd be quite surprised that it's very sophisticated in some countries that you wouldn't think it would be. And the company that is helping merchants access customers in these various locations, what they call emerging markets, is dLocal. This is a very simple diagram of their platform, pay-ins and payouts. So they allow merchants, mainly in the United States and Europe, to interact with customers, whether that's B2C or B2B, in foreign countries that they've previously been unable to. So they support 700 payment methods, and when you hook up your application programming interface, the API, one connection, suddenly you support 700, up to 700 payment methods across 35 countries, and you have access to 2 billion customers. Now, a company won't just sign up for all countries. They sign up for a few countries and then start expanding based on where they want to expand. And like other payments companies, you can see here, they're dealing with a lot of different types of payment. So you can see how those are spread out. And if you travel at all, you'll be aware that there's a great deal of variety when it comes to apps. And you may not just be able to take an Uber anywhere. Certain countries, they have Uber substitutes or other substitutes for apps that you use. So when it comes to payments, you can see there are a lot of options out there. And like other payments companies, they have to make their money through taking a cut of total payment volume that goes to their platform. You can see here on the left how rapidly that's grown. So very exciting. They take a cut of that, means that's a proxy for revenue growth, all things being equal. But if you look on the right-hand side here, we've plotted last quarter's total payment value for PayPal, Adyen, Block, some of the other payments providers, and of course, dLocal. So you get an idea of just how small a fraction of payment volume they're processing compared to some of the other larger firms. Now, when we look at international diversification, you can see here that for quite a while, they were upwards of 90%, I think, for the last 3 years in LATAM. That's where 91% of their revenues came from. And we'll point out the countries in a second. But now they're starting to expand into Africa and Asia. You can see here on the right how rapidly they're growing that. So you can think about it as a merchant wanting to accept payments in a particular country, but not being able to. And all they do is ask dLocal to turn that connection on, and suddenly they're able to offer payments. So that's very useful. And the merchants that are using this are some marquee names. So here are some use cases of how the platform's being used. So you can see that merchants are able to sell products and services in Nigeria. There's video streaming companies offering their content in Peru, so Peruvians can pay using their local payment methods. There's a ride-hailing service that's being used in Argentina for facilitating payout solutions, bank transfers, split payments, tax withholdings, etc. It becomes very complex to operate in some of these jurisdictions. And you can see the last use case here surrounds a global internet search engine that wants to route traffic to payments providers with the highest probability of success. So when we look at the names, this is very exciting. So they had, as of their last quarterly report, 500 merchants. These names really stand out. So Microsoft isn't listed here, but that's one of their clients. You see Nike, Uber, Amazon, the biggest company in the world, is using this platform. That's a very, very big sign of confidence. And reading through the financials, they have one customer that's greater than 10% revenues, and they make a remark about a large e-commerce firm being one of the earlier clients, and it certainly seems like that was Amazon. When you look at new merchants, they're averaging 8 new pay-in merchants per month and 2 new pay-out merchants per month. On the right-hand side, you can see the processing volume broken down by these 4 categories: entertainment, mobility, consumption, services, very diversified. And just one client commands more than 10% of revenues right now, whilst the top 10 are just over half. So that's some pretty heavy concentration, but given their business model, it's understandable. And you can see that that's decreasing meaningfully over the last 3 quarters, and it's trending downwards so that they're less dependent on their top 10 clients. On the right-hand side, you see a chart. It's quite cool, showing the number of countries per top 10 merchants. So perhaps the merchants that have been longest on the platform are doing 17 different countries, while the others are doing an average of 9. And of course, that's a function about whether or not the merchant wants to expand into other countries. Seems like a pretty easy way to capture revenue, especially if you're a big brand that's known all over the world and you want to start selling your products in emerging markets. Now, this is a great slide taken from their last quarterly presentation that shows, look at that net revenue retention rate. And that was, I think, over 200% in 2021. It's dipped a bit, but it shows the spending from merchants over time, meaning that they're liking the platform and they're increasing their usage of it. Really like on the right here, these sequential charts that show the last 3 quarters. There's total payment volume. And of course, revenue matches that, as you would expect. And they're growing that at a reasonable pace. Now, one of the things we wanted to know is what countries they're getting their revenues from. And they only provide us with 3 data points. Brazil, it was 28% of 2021 revenues. Argentina, 8%. LATAM, 92%. So if you go back and look at that chart they put out that implied they're operating across the globe, well, most of their money is coming from the 5 countries that we've highlighted there in yellow. This is MSCI's breakdown of emerging markets and frontier markets. And then there's some standalone down there. What this represents are countries that are more mature and easier to do business in because they're more financially advanced. So if you would perhaps plot the geographies that dLocal's moving into, maybe this would be a kind of a checklist. Now, when we look at some of the other risks, some of these locales can be very tricky. You have large reputable organizations suddenly will go pear-shaped because the president's son was operating it and he just absconded with all the money. They're involved in a fair number of litigations. They just mentioned this 145 litigations, and every company is involved in litigations typically, but they're having to deal in foreign courts, and that can be very, very tricky because they're not always fair. And then they mentioned this fact here. They have 100 third-party processors. The top 10 process 41% of their volume. So again, you have some concentration risk, and they say we've only once been prevented from collecting from an agent, which resulted in a loss of $492,000. So we look at the share price. It's dropped significantly since their IPO in June 2021. and consequently their valuation ratio has dropped. But look at this, they're quite expensive compared to other fintech names. That's Schrodinger, that doesn't belong there, that's a copy paste. But look at the table here that shows valuation ratio. Look how cheap StoneCo is there at the bottom, dLocal at the top, a valuation ratio of 15. Perhaps it's because they have a quarterly revenue and net income chart that looks like that. They're a profitable firm, and that's very impressive to have a growth firm that's profitable these days, because then we don't have to worry about runway and survivability. And oftentimes people will search for this phrase, dLocal versus Adyen, and best we can tell, these two firms aren't really stepping on each other's toes. You can see that Adyen is very focused on driving their growth from North America, and that Asia Pacific and LATAM only account for a smaller percentage of their overall revenues, at least in 2021. So the conclusion is that this seems like a very compelling way to play payments in emerging markets. We were came away from this quite surprised how much we liked the firm. Merchants are doing all the heavy lifting. You just have to get them on board. They open the floodgates, and suddenly merchants are making money in geographic areas they weren't able to before. Their tech stack is built from the ground up on Amazon's cloud. It appears to be scaling quite well. We've been waiting to add some shares of Adyen, and the question is, well, do we hold both? It's a very compelling way to get some exposure to growth in emerging markets, which we don't often see unless it comes with a lot of risk. What we would like to see is a country breakdown and their Africa-Asia revenue proportion grow a lot more. So please put your comments in the comments section. Please tear this one to shreds. So we want to hear from everybody that absolutely hates this firm and thinks it's the second coming of Satan, because that's the sort of feedback we want to get prior to making a decision on entering a new stock. So make sure to subscribe to our channel, and thanks for taking the time to watch this today.